Essay 320. Hey, hi everyone, this is Ravi Agarwal, and in this essay, we are going to rock Essay 320, Materiality in Planning and Performing an Audit. Materiality where? Materiality in planning and performing an audit. Okay, so as the name suggests, materiality. So what is materiality? Let's understand. Any misstatement, if you want, you can write it down. Just a note, any misstatement, whether individual or aggregate, which may influence economic decision of the user of the financial statement. What is materiality? Any misstatement, okay, any misstatement which, whether individual or aggregate, which may influence economic decision of the user of the financial statement. Okay, so it's something which can influence the economic decision of the user of the financial statement. It's called materiality. Okay, so as per 320, what are the objectives of the auditor? Let's come to the book. As per the essay 320, what are the objectives of the auditor? Two main objectives. Number one, to apply the concept of materiality where in planning and performing audit. Okay, essay 320 say you have to apply the concept of materiality in planning and performing audit. And the second objective, to obtain reasonable assurance whether financial statement as a whole are free from material misstatement. Common point. Okay, so two objective of the auditor as per SC 320 to apply the concept of materiality in planning and performing audit. To second to obtain reasonable assurance whether financial statement as a whole are free from material misstatement or not. Okay, so next is materiality in context of audit. Okay, materiality in context of audit. So generally, you know, FRF discuss about materiality. Who discuss about materiality? FRF, Financial Reporting Framework, generally discuss about materiality. And materiality depends upon three things: amount, which may influence decision of the user; size and the nature of misstatement; and common need of the user. Okay, so generally who talks about materiality? Tell me, you only tell me. Generally who talks about materiality? FRF, Financial Reporting Framework. And materiality depends on how many things? Three things. Number one, amount, which may influence the decision of the user; size of the misstatement; and common need of the user. And if in case, understand, FRF does not discuss about materiality, in case Financial Reporting Framework does not discuss about materiality, then what will you do? Then auditor shall frame materiality on the basis of, just now we discussed, three factors: amount, which may influence the decision of the user; nature, size of the misstatement; and common need of the user. Now, materiality is a subject matter of auditor's judgment. Okay, or materiality is a subject matter of auditor judgment. It means auditor is going to use its professional judgment and gonna determine materiality. Correct? Yeah, materiality is the subject matter of auditor's judgment, and concept of materiality must be applied. You know this because it's given in the heading only. Concept of materiality must be applied in planning and performing audit and evaluating the effect of identified and uncorrected misstatement in the financial statement. Evaluating the effect of identified and uncorrected misstatement in the financial statement. Okay, so and lastly, here in planning the audit, auditor makes judgment for nature, timing, extent of risk assessment procedure, identifying and assessing the risk of material statement, and nature, timing, extent of further audit procedure. So what have we understand? What are we studying actually? 320, materiality in planning and performing an audit. Objective, what are the objectives of the auditor as per 320? Very simple, to apply the concept of materiality in planning and performing an audit, to obtain reasonable assurance whether financial statement as a whole are free from material misstatement. Materiality in context of audit. Okay, so generally, you know, FRF discuss about materiality, but however it depends upon three things: amount, which may influence the decision of the user; size and nature of the misstatement; and common need of the user. Okay, and if in case FRF does not discuss about materiality, we are gonna, auditor is going to frame materiality on the basis of the other three factors. Now, concept of materiality is a subject matter of auditor's judgment, right? And this concept of materiality must be applied by auditor in planning and performing an audit and evaluating the effect of identified and uncorrected misstatement in the financial statement. The next concept here is performance materiality. A lot of people find it difficult, but it is damn easy. So what is performance materiality? Understand, it refers to the amount or amounts set by auditor at less than materiality level for the financial statement. Okay, say for instance materiality level we've set is 10,000 rupees, so the performance materiality will set it something around 7,000 or anything, but it should be less than materiality level. Okay, so what is performance materiality? Let's see it again. It refers to amount or amounts set by auditor at less than materiality level for the financial statement as a whole. Why do we set it less than materiality level for the financial statement as a whole? To reduce its risk to an appropriate level. See, this is the key point. Why do we set performance materiality less than materiality level? Why we do it? So that we can reduce the risk to an appropriate level. What is the risk? What kind of risk you want to reduce? You know, there can be some misstatement detected but not corrected, and undetected misstatement. That is, there can be misstatement which, if aggregated, okay, can become material also. Okay, there can be small misstatement, right? Undetected misstatement, not corrected, that is uncorrected misstatement, undetected misstatement. If you aggregate those, it can become material, right? So we set it performance level less than materiality level, so that even if there is some Understand why we said performance materiality less than materiality level, that even if there is some undeducted uncorrected misstatement, when we aggregate it, even if it becomes material, the impact will be lower than materiality level. It does not exceed materiality level of the financial statement. You got my point? Let's understand it once again. It refers to you just don't learn it. If you understand it, you will be able to learn it and you will be able to recall it. It refers to the amount or the amount set by auditor at less than materiality level for the financial statement. Why? So that we can reduce the risk to an appropriate low level. So that aggregate of finance or aggregate of misstatement deducted but not corrected and undeducted misstatement does not exceed materiality level. Even if that that undeducted uncorrected misstatement, and even if it is aggregated, it becomes material, then also it will not exceed the materiality level. Why? Because see, materiality level we said 10,000 rupees, okay, and performance materiality is, say for instance, 7,000 rupees, okay, then even if then still there is a gap of 3,000, right? So even if something is there, then it will not exceed materiality level, right? So that is the reason why we set it lower than lower than materiality level, so that it reduces the risk to an appropriate level. Got it? So this was about performance materiality. Next is requirement of SA 320 and benchmark, and then your SA is done. Now requirement of SA 320. What are the requirement of SA 320? Very simple. You have to write requirement of SA 320. So auditor shall determine overall materiality level. What is the requirement of SA 320? Number one, it says you have to determine the overall materiality level. Okay, what is my overall materiality level? Number one. Number two, materiality level for ABCD, that is account balance, class of transaction and disclosure. Okay, so the first requirement as per SA 320 is auditor shall determine overall materiality level and materiality level, account balance, class of transaction and disclosure, ABCD. Now revision as audit progresses. Second requirement of SA 320. Now can auditor revise materiality and performance materiality? Yeah. Why not? Or revision as audit progresses. Auditor shall revise materiality and performance materiality for financial statement as a whole, for account balance, class of disclosure when required as audit progresses. Auditor can revise when required. Are you getting me? Now then the next requirement is documentation. Okay, see here in documentation, materiality for financial statement as a whole, you have to document what was the materiality for financial statement as a whole, materiality for ABCD, account balance, class of transaction and disclosure, and performance materiality and any revision as the audit progresses. Okay, so these are the requirement. Very simple. And the last, but people find it confusing, benchmark. But this is so simple. See, what is benchmark? Okay, what happens here? How do we get materiality? We apply some percentage on the benchmark and we get materiality. So what is this benchmark? Percentage is often applied on a chosen benchmark. Okay, what do we do to find out the materiality? We apply a chosen percentage. Okay, so you will say what percentage that I will apply on the benchmark I will get a materiality. What will be that percentage? Is that written anywhere? No, that percentage is a auditor's professional judgment. Auditors determine it through its professional judgment. So percentage is often applied on a chosen benchmark as a starting point in determining materiality for financial statement as a whole. So simple, no? So you get a benchmark. What is benchmark? You may ask me that what is benchmark? It's kind of a method to determine materiality level. Simple. How do we get that materiality level? Percentage apply on the benchmark and we get that materiality. Is that clear? Okay, so once again, what are we studying here in this essay 320? Materiality in planning and performing audit. What is materiality? Materiality is any misstatement, whether individual or aggregate, which may influence economic decision of the user of the financial statement. What are this objective? Two simple objectives: to apply the concept of materiality in planning and performing audit, to obtain reasonable assurance whether the financial statement as a whole are free from material misstatement. Now, this materiality in context of audit, generally, FRF discuss about materiality. However, it depends upon three things: amount, which may influence the decision of the user; size of the misstatement; common need of the user. And FRF, if in case does not discuss about materiality, then we shall frame materiality on the basis of the three factors. The concept of materiality is a subject matter of auditor judgment. Yeah, concept of materiality must be applied in planning, performing audit, and evaluating the effect of identified and uncorrected misstatement in the financial statement. Performance materiality, very simple. We set it lower than materiality level or above materiality level. Lower. Why do we do it? So that we can reduce the risk of reduce its risk to an appropriate low level. So that aggregate of misstatement deducted but not corrected and undetected misstatement does not exceed materiality for the financial statement as a whole. Okay, and the requirement of SA 320 is very simple requirement. Auditor shall determine overall materiality level at ABCD. Revision as audit progresses. Yeah, auditor shall revise materiality and performance materiality for the financial statement as a whole, for account balance, class of transaction, disclosure whenever required. Yeah, we can revise as audit progress the materiality level and performance materiality. Okay, and what all documentation you are going to do? materiality for financial statement as a whole, materiality for account balance, class of transaction disclosure, performance materiality, and any revision as the audit progresses. Now let's understand about benchmark. Now what happened, percentage is often applied to a chosen benchmark as a starting point in determining materiality for the financial statement as a whole. So what we do, we fix a benchmark and we apply a percentage on it and we get the materiality. What should be the percentage? What percentage will depend upon auditor's professional judgment. Okay, so this is all, and what is that benchmark? Few people ask me, so what is that benchmark? We need to find out the area in the financial statement and we fix it as a benchmark. Okay, you'll ask me the uses of benchmark in determining materiality for the financial statement as a whole. See, we've made a mnemonic for this. It's called VENUS. VENUS. V is volatility. Okay, what are the uses in determining materiality for the financial statement as a whole? VENUS. V is volatility, the relative volatility of the benchmark. E is element of the financial statement. N is nature of the entity. U is focus areas of the user, and S is ownership structure. Are you getting me? What are the uses of benchmark in determining materiality for the financial statement as a whole? Uses of the benchmark in determining materiality for the financial statement as a whole. VENUS. VENUS. Write it. It's not there in the book. VENUS. V is the relative volatility of the benchmark. E is nature of the entity. E is element of the financial statement. N is nature of the entity. U is focus area of the user, and S is ownership structure. So what is V? Relative volatility. The area which you are choosing as benchmark, it shouldn't keep on changing. Okay, it should be less volatility. You have to see that, right? Number one, V. E is element of the financial statement. You know the element of the financial statement, whether you can take it as asset, liability, equity, revenue, expense. N is nature of the entity. You have to see whether it's trading, whether it's service provider, what is the nature of the entity. U is focus area of the user. What is the focus area of the user? Whether the focus is on profit, whether the focus is on revenue, whether the focus is on net asset. Okay, and S is your ownership structure. Okay, whether it is focused more on the equity or debt. Okay, you have to see that. So this is about use of the benchmark in determining materiality for the financial statement as a whole. VENUS. Okay, so this essay is done. 320. What was it? Very simple. You have to see the objective, you have to understand the materiality, then what is performance materiality, what is the requirement of essay 320, and benchmark. What is benchmark? A benchmark is a percentage applied on the benchmark is used basically to determine the method of materiality level. Okay, and what you do here in benchmark, you apply a percentage and you find out the materiality level. What are the uses of benchmark in determining materiality for financial statement as a whole? VENUS. What is V? V is, tell me, come on. V is relative volatility. E is element of financial statement. N is nature of entity. U is focus area of the user, and S is ownership structure. All right, bye bye, see you on next essay.